Deirdre Bosa is here for Tech Check. Deirdre, what can you say?
Hey, Kelly. So I got a hold of a document that Anthropic is showing to investors outlining expected revenue this year, gross margins, and a breakdown of different parts of its business. A look under the hood of one of the buzziest startups in Gen AI. It shows that its top line is projected to grow more than 1,000% year over year in 2024 to $1 billion. But its gross margin thinner than the typical high-quality SaaS company at just 38%. Now, of course, that likely has to do with higher upfront costs in developing these models, like the need for GPUs, and that results in high infrastructure and operational expenses. Investors, however, especially in venture capital here, they're willing to look past those lower margins if top line is growing at 1,000+%. Better revenue growth also helps valuations look somewhat more reasonable. The information reported that Anthropic is in talks to raise another round at a $30 to $40 billion valuation. At the upper end of that range, with $1 billion in sales this year, it would put its sales to valuation multiple actually lower than it was 9 months ago. Similar story for OpenAI, which is closing in on a round that would value it at $150 billion. Now, that would be less than double its last valuation of $80 billion. Still rich, mind you. But it's reportedly set to double its annualized revenue this year. So momentum from both of those darlings and others in the space, like Scale.ai, is likely to help them continue to raise capital at ever higher valuations, especially when the multiple looks this way. And it's sort of a trick like we've seen from NVIDIA, because sales are growing so quickly, it gets lower. Now, a look a little deeper, though, into Anthropic's numbers, which I did, and some of the risks become a little clearer as well. Third-party APIs expected to make up 60 to 75% of total sales. Now, that refers to the interfaces that allow external developers or third parties like Amazon's AWS to build and scale their own AI applications using Anthropic's models. As these models become increasingly commoditized and customers increasingly build their own, major question, open question, can the source of this revenue continue to grow at the same pace? Really fascinating, Kelly, when you look at something like the chatbot from Anthropic, Claude chatbot, that makes up about $150 million of projected revenue this year versus more than $650 million for those third-party APIs.
You know, I know the top line is strong, but as I understand it, and this is, I don't know if the company itself has disclosed this, cost per query for OpenAI, 36 cents. So they're losing money, or let's not say they're losing money. There's a cost of 36 cents associated with every query. Exactly. OpenAI could lose $5 billion this year, the information reported a couple of months ago. So the revenue is impressive, but these are incredibly expensive to operate.
Absolutely. I mean, and that's the reason why I'm looking at this document that shows Anthropic's, aggregate gross profit is just 38%. For a high-quality SaaS company, that's somewhere between 70 and 85% because of those costs. Those queries are expensive to run, and that is also why everyone, the mega caps are, when I say everyone, the mega caps are looking at building their own chips to lower that cost. And, there's signs that they're able to do so, right? Like Google, which rolled out AI overviews to everyone, say that it's actually not costing them a material amount of money because they've come up with more efficient ways to do it.
And I hate to say this, but I find them very useful. I do. I think it's been a good innovation. I use it all the time. I've stopped using, Perplexity and some of the others as much because I don't want to go to the separate app. Yeah, I'm using Gemini. Exactly. Deirdre, thanks. Deirdre Bosa for now. We appreciate it.